done presentations from an airplane, like literally on Delta.
No, not on the plane yet.
No. But I'm gonna.
Right here.
Well,
Can you
so
see? Can you hear me? See me?
we hear you. We see you. We're gonna make you bigger. You have no slides.
That's unfortunate if you make me bigger. That's unfortunate.
But could you just, for some that don't know you, just do a quick intro and then how you see the investment world today?
Yeah. Well, first of all, I'm sorry I missed Todd. Sorry I can't be there. I forgot that my wife has scheduled me to do something tonight. Sometimes you have to do these things in life. So I actually will be there tomorrow for iConnections. And I'll be there for other meetings. So I'm going to be in Miami. And just as an FYI, if people want to see me, glad to try to meet people. I will be in Miami and Palm Beach starting Tuesday through the weekend. So that anyway, couldn't make it quite for today. Yeah, it's interesting. You know, I sort of always have you asked me for background. I did 40 years of CFO work, including Yahoo, Siebel, Fortinet, At Home Network, Sybase. Was involved in 3 companies going public, including my first one back in the 80s, VLSI Technology and semiconductors. I have been involved with, semiconductors. I've been involved with internet, network security, and cybersecurity. Just a whole bunch database application software. Today I'm on a number of public, private, nonprofit boards. I think it's about 12 or 13 in total. Active investor. I think I have the most K1s that my tax guy has ever seen. So I do see a lot. I did spend 5 years running, if you want to say it that way, the family office of Eric Schmidt, Hill Aspire. I ended that in 2022. And now I do a lot of conferences, attend a lot of conferences, family office conferences and so forth, and did a lot of investing.
Before you start, do you mind if I record this for posterity?
It's absolutely fine.
Okay.
Everything I say will be for the record.
Recording in progress.
Everything I say is for the record. So, it's interesting. I sort of cut in as you were talking about liquidity and funds. I saw a note that last year the DPI, distributed proceeds, was 6.5% of the net asset value of venture capital funds, which is a real low point. It used to be 25 to 30% a year. Was that way for many, many years. So we are in a drought. We say it's related to the market and so forth, which I disagree with a lot. What's happening now is companies are having a hard time going public at the valuation that their earlier rounds suggested. So they don't want to do a down round going public. Or frankly, I call it adverse selection. It'll be interesting what Todd's going to say, but has said, because some of the best companies, Canva, Databricks, SpaceX, and so forth, don't need to go public because there's so much money and privately that they can stay private longer. So they can stay private longer and continue to, basically create some secondary for themselves. So inside, this changed about 10 years ago, where insiders can now sell in the secondary market. We never used to allow that. I was involved in 3 startups, a whole bunch of private companies that went public, and we never used to allow that, but it's changed. And so consequently, some of the best companies don't now need to go public. And that's probably has as much to do with anything for the paucity of companies that do go IPO. Having said that, clearly there's no question, I'm saying something everyone has talked about reading wise and publicly, that it's a much better environment for the markets. I think the fact that we're talking positively about business is as important as talking as positively about business is as important as doing it. So that's really a real big plus in terms of, the sort of the mood of the street, if you will. I think over time, getting, reducing regulations or just being more positive about how we think about regulations. It's interesting, as an aside, I was at a Milken conference about 2 months ago, and I was on a breakout session, and and no one wanted to, talk about it, but I ended up, because I am that way. I said, the biggest problem with Europe, you guys are all screwed up because you have just too much regulation. The only thing you export out over in Europe is regulation. And now you're starting to see people recognize, you're now seeing it much more publicly because of Trump and his less regulation, pro growth, pro America approach. You're now realizing Europe now is wringing their hands, and I'm just not a big fan of investing in Europe. And so people try to raise money in Europe for me. I say, hell, no, why? Why? It's just a tough environment until they change their approach and philosophy about business being good as opposed to being necessarily bad. So that's a comment. I do think the only thing that gets me nervous, and then we can take Q&A. The thing that gets me nervous is when everyone is so positive, I get worried. And clearly you have a situation where everyone is very, very positive right now. And so, people were, I mean, I have a lot of very smart people all expected a black swan to occur last couple of years. Jamie Dimon has been very public about it, in terms of the worst geopolitical he has seen since World War II. It's obviously very correct, but so far so good, so to speak, and that it's getting less, troubling than more with some of the wins that both Israel and the U.S. have had. Hopefully, as we can improve even more so. I mean, I like the fact that we are at least talking about now getting out of wars as opposed to being in wars. So I'm positive about that. But the only thing I would say is I am a little worried. I think I am a little worried that there will be something going on because we're just too positive. Having said that, I think the fundraising will improve, which Mark was alluding to before. I think people will see more liquidity this year. I think private equity. I happen to be a little bit more partial to private equity than venture, but just because I think it's easier to invest in real companies right now. And the other thing I think is private equity folks. They go into investments with a much more, thoughtful idea of how to exit and how to create liquidity. And I think venture guys go in more with a hope and prayer that it'll work over time, and more worried about getting deals done. So I'm on the margin. I'm a little bit more positive on private equity, and I think it's a good way to continue going. I do think there will be a wringing out of private equity and venture funds, in that you will have to continue to raise money. You will have to show liquidity. You'll have to show not just TVPI and not just MOIC and all the IRR and all the other letters people like to brag about, all the deals they're doing. I think now there's more and more thought, and I've been pushing it now for a couple of years. The only three letters that matter in venture right now is called DPI. And so I think liquidity matters too. I see it in institutions, I see it in endowments, I see it in high net worth individuals. The idea that we do need to see more DPI coming back, for these asset classes to do well. So why don't I stop there, and I'll continue on if any Q&A. Mark, I don't know if you have questions, whatever. And again, just so you know, people can reach me on LinkedIn. Mark, I'm happy if Mark gives my email. Either one is fine. And I'll be starting in Miami. Sorry I couldn't make Naples either, but I'll be in Miami and in Palm Beach for the balance of this week, starting tomorrow. I see no one, Mark. How come I see no one at the front table?
Hello, can you hear me? Okay, my question is, I would like to understand what is your opinion about dual listings for companies in Europe? I understand you are not bullish on Europe, which is fair enough, but what do you think about companies, real companies that have production in Europe and market in Europe, but would want to do dual listing, let's say in Amsterdam and on NASDAQ? Thank you.
Yeah, I'm not an expert there, but just to give you a perspective, I was on the board of NXP Semiconductor, an Amsterdam-based company for 12 years. Got off a couple of years ago. We were Nasdaq listed, so so yeah, I think it's obviously very doable. I think it's a good way to go because you being partial to local exchanges as well as having a U.S. exchange. And I mean, I'm seeing more and more now companies in Europe wanting a U.S. either NASDAQ or NYSE exchange, beyond exchange. So I think, but I think if you do them both, I think that's a good way to go, and it's a good way to sort of split the hair, if you will. So I would be a proponent of it, and I do think things will change. I am, again, I think it's interesting. The conference I attended, uh, there were a bunch of very senior folks from European governments on this panel. No one wanted to broach it. I decided I would. And then all of a sudden, everyone was sort of, supporting me, not so much the people in the government, but other people, investors there, because I said something they many of them believe, but they didn't want to say it. And all of a sudden, you really saw it, and I see it over and over again. Europe with Trump is realized they have a problem. They didn't realize it with Biden, but now they realize they have a problem. And so I think it's going to be really important. I think whether it's I think the new world in energy. I see what's happening in Germany now with energy prices, UK. So anyway, that I would be a proponent of it. Just to answer the question.
Thank you so much.
Other questions? Hey, Ken, Bill Deichler here. Good to see you again. Two quick questions. One, what do you think about 2024, 2025 as vintage years for the VCPE market?
I don't know. It's that's funny. We'll see. I guess the I think the clearly. Well, here's the thing I always think about. No one said, when we were in 21, none of the people raising money said these would be lousy vintage years. It's interesting. I don't think when they were raising money, no one said, boy, this is going to be a lousy vintage year because the valuations are so high. So now people say, boy, it's a great vintage year of 24 because valuations are more thoughtful, or responsible, whatever term you want to use. So, I think there is something to be said about that. I do think there is clearly the valuations are overall much better today than they were in 21. I think the thing that I don't know that anyone knows, is I think 60-70% of money has gone to AI companies. And I don't think anyone has a real sense. I mean, it's like putting picks and shovels, just hoping it works. I don't know how well that's going to work. And so how the vintage years, this 24, 25 vintage years will be really much dependent upon how much of these AI investments work out. I'm in some venture funds that say they're doing relatively modest amounts of AI because they worry about the AI valuations. So we shall see. I would be, frankly, I do think it will be better because I think there's been a lot of the hubris is out of the venture market. And I think there's a lot more push by LPs that the investments have to make more sense than we've seen. But I'm in funds like Andreessen, and I'm very hopeful. I mean, they get into some of the best AI companies, but I look at the valuations, and Thrive is leading a lot of these. But Thrive has been doing well in terms of their overall markups. So we'll see. But I think the only thing I'm saying is everyone's talking about a better vintage year, but I don't remember anyone talking about 21 when they were raising money or investing being a bad vintage year.
Got it. So another quick follow-up, if I may. Our little pension fund is starting to get involved and interested in venture and private equity. We've got a consultant that helps us, but I was curious, other than yourself, and don't mean to put you on the spot, if there are other investors that you think are like really good people to talk to about getting into the space, either in the family office or the institutional area, either one of those segments.
Why don't you just email me? I'm kgoldman5@gmail. Email me. Let me do some thinking so I don't do that. I don't mind being put on the spot, but I'm not sure I'd come up with a name on the spot that would be the most thoughtful. I would just say, so just feel free to email me. I would say it is a good time. I see a lot. I'm also on, I didn't mention this earlier, I'm on two subcommittees that would do alternative investments and private equity. I'm on the Cornell University private equity subcommittee, alternative investment subcommittee, actually. I'm on also a Lucille Packard, the Hospital Foundation Board, on their subcommittee on alternatives. So I see the returns from a lot of funds and have a good perspective, I think, of what folks see and so forth. And the only thing I would say is I always beware of funds that are easy to get into because they may be ones that others don't get in. But if you want to send me a note, I'm glad to have a separate discussion with you.
Ken, how many funds are you invested into? How many K1s do you receive?
I get over 300 K1s.
Yeah.
Yeah, I think my
you
tax
beat
guy
that,
said
Todd?
yesterday he's raising my price. He said my tax return was 18,000 pages. And the only good news he said is I probably won't get audited because it's just too complicated.
Too big to audit. Okay.
Where are you, by the way? I see you look like in a high rise.
Yeah, we're in Miami.
I know that where.
Greenberg Traurig.
Oh,
Beautiful-
Greenberg Traurig. Okay. Great
beautiful
law
view.
firm. Yep, great law firm. Yep, I know who they are. Great law firm.
Marvin Rosen. He
Yep.
says hello.
Yeah, no, I know Marvin very well from Lucille Packard. We've seen not Lucille Packard, from RFK Human Rights. I've seen him and his son there. Yes.
There you go.
And by the way, I would just say to all of you, I mean, I do a lot of, I go to a lot of conferences. I'm involved with Milken. I'm involved with Hoover and RFK Human Rights, which is Kerry Kennedy. And, you know, you meet a lot of interesting people. They have another good, they actually have a good conference in June and of all places on the Cape Cod, which is a lot of fun. So I've seen him at those conferences. So it's just, you know, you go see a lot of them. I'll be at iConnection starting tomorrow, which is follows up your conference, Mark.
Yep. Well, we have some dinners tomorrow night and the next night, so maybe we'll rub shoulders. Any other
hope so.
questions to Ken?
What did Todd say that I did? Is he more bullish than me?
Well, he just made the case for lower middle market, and I mean, he's full of data as usual.
Yeah, no, I'm in his last fund actually. Yeah, his charts are very, very good.
Yes, that's why we like him.
Yeah, he tends to be more bullish though than I am.
Oh, okay. What do you disagree with Todd on?
No, I think the middle market is an interesting place, but he tends to be a little bit more, you know, positive on the venture community, and I think it's still an area that has to. I think the venture asset class has to rethink. I mean, if you look at, I saw something the other day on returns, and you know, the venture asset class hasn't had good returns overall for the last 7 to 10 years. You know, that takes into account the volatility, the liquidity risk, and so forth. So I think, you know, and again, part of it is because of dynamics that have changed in that, you know, you can't really, I mean, Stripe, I mentioned Stripe, Databricks, Canva, SpaceX. I mean, SpaceX is a great 350 billion valuation, great company. But how do you, yeah, I guess you can create liquidity in the secondary market, but there's not a real exit. Stripe keeps on raising money, Databricks keeps on raising money, and so forth. So I think it's a little hard to see right now. And then you had, you know, honestly, which I'm hopeful changes is, you know, some of the companies that will try to get M&A like Figma and some others got stopped by the various administrations around the world. And so I'm hoping we will have a better M&A. Certainly, JP Morgan has said that, Goldman Sachs has said it. Davis Holm, I just heard him recently at a conference saying he expected a much better IPO market this year. I think that's true. The only thing I'm trying to say, it hasn't been because of markets weren't open. The markets were very open. We've had 2 great years, 20% plus growth in NASDAQ and S&P returns. So it's not because the markets haven't been good. It's because companies haven't gone public because they haven't seen the need to go public, or they don't like the valuation of public because it's not equal to their crazy valuations they got in the private rounds, and they don't want to do a down round. It is not because the public market wasn't open. That is where I fundamentally disagree with many people. And I've taken, I shouldn't say we've taken a number of companies public. We took Fortinet public end of 2009, first one to go public when everyone said you couldn't go public, and I said yes we can, because if you're good companies, the market is probably 90% open at all times, and so the idea the market's not open is fallacious, in my opinion.
Fair enough. Well, thank you, Ken. I hope you can stick around because we have a special presentation that I actually intended to make to you and Todd, but you're not here. But I'm gonna.
I'll just go on mute and I can stay on.
Okay. So, well, because your name is Heinz, yes. It's the Heinz exception.
Ken, it's good to see you. Are you still there?
He's on. Yeah, he's just off camera.
Okay. So Ken, can you talk a little bit
Yeah,
about what some of
I'm
your?
back. I
This
thought
is
Mark.
Heinz.
I thought
was
Mark
wondering,
told me to get off.
Can you tell us what some of your favorite sectors are outside of AI? Because I know you've done a lot in cyber over the years. What do you think of space? What do you think of defense? What sort of sectors excite you these days?
You know, I think well, you mentioned a few. I think first of all, I think defense. You know, if I sort of say it, I'm an investor in 8VC. I like the things they're doing in defense. So I think that's an area. I know Eric Schmidt, my former boss, is very involved in a lot of defense companies. So I like it for a whole bunch of reasons, including I think people will go away from the big five and do more. I think more companies will do more procurement from some of these other, tech companies. So the world, as we see from Ukraine, the world of offense and defense is changing. So I like defense, and again, a firm. I'm not trying to push 8VC, but I like them. I think there will be some. I think folks that have really good AI practices will do well in AI because they see so many companies and they can pick and choose the ones they want. I think cyber is an interesting. I'm on the board of a company called App Omni in the cyberspace. There's a lot going on there, but on the other hand, I think there's too much money going into the space. I think the space itself, I see companies investing in space, but I don't know. It seems very nascent. When I went to CES, there's a lot of money going into robotics, which I think is interesting. A lot of money going into autonomous vehicles, which I think is interesting. But also, we've seen a lot of companies not do so well in both those areas. I actually think software will continue to be a strong area of I think it'll be coming back, and some of the valuations got ahead of themselves. But I think software is a fundamentally a good space. So those are some of my things. I know I'm in some funds that do a fair amount in space, and I sort of it's so out there to me. The area that I think is interesting, but I haven't figured out, is biotech. I'm in a number of biotech funds. They've lagged seriously, but there's so much going on there, and I do think with perhaps less regulation, in more open markets, that maybe the biotech area is. So you didn't mention that, Heinz, but I think maybe the biotech market comes back going forward. So that's another area of potential growth.
So that's actually a great question, a good segue to what we're about to talk about, because in a way, Bill, you put Ken on the spot a little bit, like who should I be talking to? What we want to do is create the ability to collaborate in this opaque family office world, but in a trusted chain. If he trusts you, he's happy to share that knowledge. It's not about a deal. It might be about a deal. So we think we've been, and we're sort of alpha betaing this, but this is sort of a wider audience than I had intended. But we want feedback. We sort of talked about it in Naples. By the way, you guys got to come to Naples next year. It's not just for the pickleball.
I agree with that, by the way. Maybe I just added myself back in. I have a friend of mine. I have a number of friends that live in Naples. It's a phenomenal area. I wish I could have gone. It always is a weekend before I'm supposed to do something else.
You hate flying on Sundays or Saturdays.
Yeah, but I need to
get
get to
that.
Naples because I have a bunch of friends there, and they just hosted the former president of IBM, Virginia. I can't think of her last. Rometty. I'll pronounce it wrong. I'm pronouncing it wrong, but anyway, she was there, and there's a number of folks that have gone there. So I agree with you, Mark. It's a great area for business folks now, first homes, second homes, and so forth.
A data point, Denison has raised more money in Naples than any other city. But
Yeah, no, I have a lot of
university.
friends in Naples now.
But
And it's-
let me segue because I got to keep on time. I want to introduce.
Come join our 361 firm community of investors and thought leaders. We have a lot of events created by the community as we collaborate on investments and philanthropic interests. Join us.